Financial planning for people in their 50s, the 5 things that you need to plan for. Now, in your 50s, it's likely that you've got your mortgage down to quite a low amount and you've got a lot more surplus cash flow than you did when your mortgage was a lot higher. So you need to work out what to do with that extra savings, so whether you just spend it all or whether you put that towards savings, potentially for your future retirement. So that's the second thing, retirement planning. You need to start thinking about when you might like to retire, how much you might like to spend, what that looks like, and can you afford all of these different goals in retirement. To help with that is the third aspect, which is your superannuation. So in your 50s, your super balances are probably getting quite healthy, and you need to make sure that you're optimizing it there in terms of the product, potentially extra super contributions. You may have the balance in your 50s to also warrant a self-managed super fund, but there's a range of considerations as to whether that could be right for you there. Fourthly, in your 50s, your kids have likely finished or are finishing high school, so you may have some surplus cash flow coming through there, especially if they're in private school. However, they may have other ambitions for you to help them out with a car or a house deposit or things like that. So you need to confirm whether you can afford that as well. And then lastly, in your 50s, it's probably the decade where you have the highest chance of claiming on insurance, because obviously as we get older, there's a greater likelihood of illnesses and diseases and things like that. So having your insurances in place, especially if you've still got a mortgage and dependent children, is really important. So go back through this video, write a list of the action items, and as always, if there's anything that you need help with, please feel free to reach out.